In this video, I am going to show you how I set up my charts to trade Forex. Basically, when you install MetaTrader 4 and you enable a chart like the chart I have here, which is USD JPY on the 1 hour, and I always trade on the 1 hour. When you enable the chart standard, by default it comes up just like this. So to get started, basically what you want to do to get started is turn this grid, this background grid off. You can take your cursor, right click on the chart and go to properties, and you want to turn the grid off. It may be checked, you just want to uncheck it and make sure you have the show ask line checked, leave the show OHLC checked, and you want to change it from bar chart to candlesticks. You also want to turn on your chart scroll. Then you want to go to colors. Your bar up should be green or lime green. Your bar down should be red. Your bull candle, which is an up candle, should be green or lime green. And your bear candle, which is white by default right now, should be red. And you click OK. Now, if you zoom in slightly, you'll be able to see your candles and your wicks. When you see a long solid line or a short solid line, doesn't matter if it's red or green, that's the body of the candle. When you see these skinny lines at the end of the candles or at the top of the candles, those are your wicks. So that is what I commonly refer to as candles and wicks. I also install a couple of indicators, and the way you install the indicators is you go to Insert, Indicators, and I usually go to Trend and Moving Average. The first indicator we're going to select is a 50-minute indicator, and you want to change the period to 50. You want it to be exponential, and we're going to change this to green or lime green. There is your 50-minute indicator. The next indicator we're going to put on is a 15-minute indicator. Period 15, exponential, and we're going to change the color to blue or whatever color best suits you. There's your 15-minute indicator. Last but not least, we're going to put on a 5-minute indicator. You want to change the period to 5, exponential, and I'm going to change this one to white. There's your 5-minute indicator. Now the way this works is, let's focus on just this area right here. Right now, your 15-minute and your 5-minute indicators are below the 50-minute indicator. This means that it is a downtrend. Anytime your 15 or 5-minute indicator is below your 50-minute indicator, that dictates a downtrend, as you can see. Now, when you want to place a trade, you have to make sure that your 5-minute indicator is below your 15-minute indicator. It's not touching it, it is below. What I like to do is make sure that this downtrend is more profound when they are separated. And as you can see, the white is not touching the blue, which indicates separation. The blue is not touching the green, which indicates separation. All three are separate, and your candle, which is your red candle that indicates down, is starting to go down, and all three of your indicators are pointing down. So in this case, I would probably draw lines stating that once my candle here drops below this blue line, this horizontal blue line that I just drew, that this would indicate a strong downtrend, because it is coming down to take out the wicks that these candles have created to indicate a further downtrend. But you also need to consider that you need to have something that stops it out if it goes in reverse on you. So I would put my stop line here, just right above or on the line of the body of these two candles, or this green candle or this red candle. It doesn't matter, they just happen to be the same length. And I would change the color of this line to red to indicate that that is my stopping point if this candle extends past this aqua line and comes back and stops me out at this red line. So I won't lose a lot of money. I'll lose a little bit, but I won't lose a lot of money. But that's what I would be looking at. Overall, this trend is an uptrend, because here's an up, then it goes further up, it pulls back, it goes further up, it comes back again, it goes up, comes back a little bit, goes up, and then comes back. But as you can see, each time this thing went up, it came back and touched in this zone area here. So it's basically taking out the buyers in this zone, and it hit quite a few times and even extended through it, as you can see with some of the bodies of the candles and the longer wicks. So eventually this is going to continue down. So what I would do is I would go to USD JPY here and select new order, and in my new order window, when this comes up, I would probably trade not a 20-cent lot, but maybe a 1-cent lot, do a pending order, and do a sell stop, and put the price in of 120.400 as my execution price, and as my stop price I will put in 120.468 as my stop price. So once this candle here continues to come down, hit this aqua blue line, and continues down, it would execute my order and open the order. But if for whatever reason the candle reversed, I had a little play in here, and if it went all the way back to this red line, that would stop me out with a small loss. But if the candle continued down past the aqua blue line, and let's just say it came all the way down to maybe 119.560 as my stopping point, I would get out there with a nice little profit. So that's how setting up moving averages on a 1-hour chart and opening a pending trade will help you continue to possibly make money when you're trading Forex. I appreciate you for watching this video, and if you have any questions, you can email me at my email address in the body of this video below. Thanks for watching, and I hope everyone has a blessed day.